Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is still above its 50-week moving average. Therefore, the full reset scenario remains the base case. Now, could the cycle be over? Of course, that's why it says unlikely here and not impossible. But as long as we maintain macro structure, we have to stick with the trend. Sticking with the trend is what kept us calm and collected when everybody was panic selling in April of 2025, as well as August of 2024 and September of 2023. And we now find ourselves testing the 50-week moving average once again in November of 2025. And what do you know? Sentiment is once again extremely fearful. This is exactly what you expect near local bottoms during corrections. We saw that at every single local bottom this cycle. You also expect to see a bunch of long liquidations, with liquidations hitting about $1.3 billion recently. You also expect to see short-term holders capitulating just like they did back in April because they bought a few weeks ago, but now that price is going down, they're concerned and selling. And you also have analysts coming out and saying that Bitcoin is headed a lot lower. And aside from price going lower and losing money, the reason why investors are so fearful every single time we test the 50-week moving average is because there's always a terrifying narrative that goes along with it. In September 2023, it was the SEC going after Coinbase and Binance. In August of 2024, it was the Japanese yen carry trade implosion. In April of 2025, it was the tariff drama that was terrifying markets, and here we are in November of 2025 and everybody is terrified about the 4-year cycle and how this cycle so far has been the exact same length as the previous two, from bottom to top at least. You also have the Fed being more hawkish than the market had initially anticipated, and you have the US government shutdown going on longer than expected, and this is limiting the amount of liquidity that can come into markets and the economy. So Bitcoin bear market calls on YouTube and X are now louder than ever. And it's very easy to get caught up in the narratives and the noise, just like the previous 3 times we tested this major support level. But in my opinion, it is so much easier to just let the market tell us who's in control. If we hold support here once again and head higher, that means the bulls are back in control. But if we break this level and close below it, it means the bears have taken over and we have to adjust accordingly. So what am I doing with my portfolio and how am I positioning during all of this uncertainty as we test major support? Well, I deployed some cash across my positions. I really didn't want to because sentiment is quite low, but following my system has yet to fail me this cycle. And every single time it's been hard to sell and take profit, it ended up being a great time to do so. And every single time it's been difficult to buy because of sentiment, it ended up being a great time to do so. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. But let's go ahead and cover the main reason why Bitcoin's price is going down, and that's because long-term holders are taking profits and buy pressure can no longer keep up. And this has been a very standard pattern this entire cycle and why we've had a slow and steady uptrend and no blow off top. Whenever Bitcoin rallies, long-term holders start to take profit. When it consolidates, they start to accumulate. When it rallies, again, they take big profits. As it consolidates, they accumulate, take profit, accumulate, and now we're in the take profit phase once again. And that's why we're not getting the blow off top everybody wants Bitcoin to have. And instead, we just end up with this much healthier, slow and steady uptrend as long-term holders take profits during rallies and buy the dip during corrections. And the reason why buy pressure is no longer able to keep up with this long-term holder profit taking is because corporate treasuries in orange here and ETFs in green, or both of them combined in blue, are no longer buying a bunch of Bitcoin and are instead relatively flat. We've seen that very clearly in the ETF inflows. We've seen that very clearly with these tiny purchases that strategy has been doing recently, because they're no longer able to use that huge premium to issue more shares and buy Bitcoin. And that's resulting in price consolidating until long-term holders and ETFs find prices enticing enough to start stepping back in. And speaking of more enticing prices, Bitcoin is back in its fair value region for the first time in a while. It's no surprise that long-term holders were taking profits in the expensive region based on how far we were from the 200-week moving average that Bitcoin loves to return to, but the closer we are to that 200-week moving average, the better the buying opportunity if you have a long time horizon. And this is exactly why Monday's free weekly report was called fair value. And crazy enough, last time Bitcoin was testing its 50-week moving average, it was also in the fair value region. And we talked about how many seemed convinced that Bitcoin was heading a lot lower and they were going to get a chance to buy in the cheap region once again around 60K, but we weren't convinced that was going to happen. And we instead thought that we would hold the 50-week moving average and go to the very expensive region, which we ended up doing because back then, very expensive was Bitcoin above 115,000, because these regions do slowly rise alongside the 200-week moving average, which continues to rise week after week. So how low will Bitcoin go during this correction? Well, we have tested the possible region now and bounced off of it alongside the 50-week moving average. I do still believe the 80 to 90K region is unlikely, but again, not impossible. Anything could happen in this market, but a 21% correction for Bitcoin is completely normal and really shouldn't surprise anybody, because we've seen these big rallies followed by 20 to 30% corrections over and over again this cycle. And we've seen about 6 20+ corrections, even though the 30% corrections have been pretty rare. As for MicroStrategy, it's now testing a major support level at the 100-week moving average, which is also coinciding with the low it set back in April of 2025. So I do expect a bounce here. They just announced that they're going to be having a Euro stock to fund more Bitcoin purchases, so we'll see how that goes. And I've been getting a lot of questions about MicroStrategy being forced to sell their Bitcoin in a bear market, but if you take a look at all of their debt agreements, a lot of it is going to come due in late 2027, and most of it is actually in 2028. So a bear market in 2026 would not force MicroStrategy to sell any Bitcoin, but of course, Bitcoin's price going down will be very detrimental for MicroStrategy's stock price. So we'll keep an eye on Sunday's weekly close. As of right now, this would be an ugly range breakdown with a huge false breakout above 109K. Now, I do put more weight on the 50-week moving average compared to this, but this is not a great sign either. And as of right now, we are down 6% in November, which you would think it would be a lot worse based on the price action and sentiment, but there's still plenty of time in the month for this to change. As for the GLI, it continues to head lower as the market prices in less and less rate cuts thanks to Powell's recent hawkish comments. We are now only pricing in 3 rate cuts over the next 12 months. This is strengthening the US dollar as it heads back up to those major moving averages where I expect it to roll back over. I do not believe the economy and markets can handle rates being elevated for as long as the Fed is currently projecting, after getting used to nearly a decade of rates being near zero. And we're already starting to see some cracks in the system, which is why the Fed already signaled an end of quantitative tightening coming on December 1st, which is only a month away. And I believe QE is going to have to restart a lot sooner than the market is currently expecting. We also know the US government shutdown is spooking investors by going longer than expected, and this is squeezing liquidity, but it's only a matter of time before this ends as well, which means it's only a matter of time before the global liquidity index continues its macro breakout and Bitcoin heads higher after finding a local bottom, and gold heads higher as well after completing its consolidation. I do believe these assets will continue to take turns rallying, even though it's not doing it right now in the short term, just because of how much fear there is surrounding Bitcoin right now. And after this brief pullback for Bitcoin and the S&P 500 is completed, I expect both of them to break higher, and the S&P 500's uptrend is still fully intact. We have to remember that the short term can be volatile, but in the long term, the Federal Reserve is still embarking on a rate cutting cycle and will have to go back to QE, even though real GDP is at 2.1% and it's forecasted to rise in Q3 because the labor market is slowly weakening and is going to force the Fed to act, even though inflation is above their 2% target. And that brings us to Ethereum. No surprise that we've seen a huge capitulation after getting that close below our major pivot level at 4,000. So I wouldn't be surprised if many investors started panic selling on the break of that level. And as of right now, we've had a strong bounce at major support at the 50 and 100 week moving averages. ETF inflows are still pretty quiet, similar to Bitcoin. I don't expect Ethereum to do anything amazing while Bitcoin is selling off. Ethereum Bitcoin took a hit as well, but it's also bouncing near its 50-week moving average. It's no surprise that altcoins are continuing to struggle, with the altcoin season index sitting at 37 because the Russell 2000 is still chopping around near that previous all-time high and still hasn't given us a definitive breakout. And until that actually happens alongside a price discovery breakout for Ethereum, I expect altcoins to continue struggling. And speaking of altcoins continuing to struggle, it's no surprise that Solana saw a pretty big capitulation as well, as it got rejected off of its range high. But the main reason why Solana is being dragged down is because we're seeing weakness in Ethereum and Bitcoin. So even though we're seeing some impressive inflows into these new Solana ETFs, and I expect this trend to continue until we see some stabilization in Ethereum and Bitcoin, Solana will likely continue doing whatever they're doing, just more aggressively, which is why we're starting to see a drop on the Solana Bitcoin pair as well, as it starts to make its way back to the December 2023 lows, where it has continued to find macro bottoms, and we're not seeing great rolling one-year performance on these assets after this recent sell-off. But I do expect that to improve as long as Bitcoin maintains that 50-week moving average macro line in the sand. But as we look forward at the longer term, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth as the currency gets debased, which is a bullish tailwind for our risk assets like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.